Okay, so let's have a look at step number 6, just for loans and investments. So that means that there must be a loan and investment in the question itself. So if we look down on here, we see that Murphy borrowed 120,000 on the 1st of 9, 2014, part of which was used to purchase an adjoining showroom costing 90,000. So remember, we need to add that on to our premises up here at the top in the balance sheet. The remainder of the loan was used to purchase furniture. So we have to do the same then with furniture, because it's increasing. So it's 30,000 or 30,000 of extra furniture that we bought. So we need to increase our furniture by the same amount if we have any up here. If not, we have to include it in our balance sheet. It was agreed that Murphy would pay interest on the last day of the month at a rate of 5%. So that's how much interest we have to pay back each month. The capital sum was repaid in the lump sum in the year 2022. And to provide for this, the bank was to transfer 1,250 on the last day of each month from Murphy's business bank account. Remember, we did an adjustment on that already as part of our bank payments. Into an investment fund commencing on the 30th of 9th, 2014. So the first thing we have to do is the loan. So we have a loan of 120,000. So 120,000 should be 120. So you're going to multiply that by 5%, because it tells in the question it's 5%, and then you're going to multiply that by 4/12. Why 4/12? Because we got it on the 9th, so you only have to pay for 4 months. So you've got September, October, November, and December. So the amount of interest that we have to pay for these 4 months is 2,000. Now, if we read on, usually gives you some kind of adjustments of furniture, but in this one here it gives us insurable interest. So that 2,000, 20% of that is for drawings. So you have to find out how much of it is going to go into our drawings and how much is going to go into our expenses. So you're going to take the 20,000 and you're going to multiply by 0.2, or sorry, the 2,000 multiplied by 0.2, and you get 400. And so your interest payable needs to be reduced by 400. That 400 will go into your drawings, and the 1,600 will go into your expenses in your profit and loss account. We also notice up here in the bank payments, we've got interest of 1,500. Now, these are two things that you need to look out for in the question. So look out for your interest and look out for anything in drawings. So the total amount is 2,000. We've paid 1,500. So we have 500 left to pay, and that goes into your balance sheet as a current liability. The next thing we have to do is look at our investments. So it tells us that each month we're going to pay 1,250 into an investment fund. So that's going to multiply that by 4 months. So by the end of that, we're going to have 5,000. Now, just down here at the end, we're going to earn interest. And that interest that we're going to earn is going to be €30. So you have to add that €30 onto the 5,000, and that's going to give us €5,030. And that goes into your balance sheet as part of your, and the €30 go in as part of your additional income in your profit and loss account.